Why are so many investors and financial institutions turning to something that exists only digitally? Because they kind of see it as a new kind of gold. It's scarce with a fixed supply of just 21 million coins. The technology behind it is being called one of the most significant financial innovations of our time. Inflation is the invisible force that makes money lose value over time. The same amount that once bought a coffee or even a house now buys far less. Because as more dollars, euros, or yen are created, each unit becomes less valuable. For savers, this creates a constant struggle, working harder just to maintain purchasing power. Now, gold has long been the traditional answer since it's scarce and it's durable, but in today's digital world, a new alternative has emerged, one that takes gold's strength and upgrades it for the 21st century, and that is Bitcoin. In 2009, after the global financial crisis, Bitcoin was introduced by the pseudonymous creator Satoshi Nakamoto. At first, it looked like a simple way to send money directly between people without banks, but built into its code was something more powerful: absolute scarcity. Unlike traditional currencies that can be endlessly printed, or even gold, which can still be mined, Bitcoin has a fixed supply of 21 million. This limit is enforced by code, not governments or institutions, and it can't be changed. That scarcity is why many see Bitcoin as digital gold, a potential safeguard against inflation and a store of value in a world of uncertain financial systems. So how can something digital be scarce and secure? It comes down to two key ideas: the blockchain and mining. Now, the blockchain is a public ledger. It's shared across thousands of computers worldwide. Every Bitcoin transaction is recorded there, making it nearly impossible to alter without hacking the entire network at once. New Bitcoins enter circulation through mining. Now, miners use computers to solve complex puzzles, and the winner adds the next block of transactions to the chain, earning new Bitcoin as a reward. But here's the twist: every 4 years, that reward is cut in half. This halving ensures the total supply moves slowly towards 21 million coins, with the last expected around 2140. So the result is a fixed, predictable supply that can't be inflated, scarcity enforced by code. And because one Bitcoin can be divided into 100 million units, satoshis, it remains practical for transactions of any size, even as its value rises. So Bitcoin is no longer for just tech enthusiasts. Top investors are taking it seriously and investing big. Billionaire hedge fund managers like Israel Englander, Ken Griffin, and Steve Cohen have put billions into Bitcoin ETFs. These are some of the smartest financial minds. They're not gamblers. Public companies are also jumping in. MicroStrategy, led by Michael Saylor, holds over 3% of all Bitcoin, using it to protect their company's value from inflation instead of cash. The biggest shift came in 2024 when the US approved spot Bitcoin ETFs, and this opened the door for big institutions, pension funds, and regular investors to buy Bitcoin easily through trusted firms like BlackRock. These ETFs raised tens of billions of dollars quickly and marked a major milestone for Bitcoin's acceptance in mainstream finance. So what makes Bitcoin or digital gold better than real gold? For starters, Bitcoin's scarcity is absolute and proven on its public ledger, unlike gold, which we keep digging up. It's also ultra-portable, divisible, durable, and easy to verify. So this means you can send billions instantly with just the internet, something impossible for physical gold. But let's be real about the risks. Bitcoin is still young and famously volatile. Its price can jump up or down quickly. Security is your responsibility, so if you lose your private keys, your Bitcoin is lost forever. And regulatory rules worldwide are still uncertain, which does add an element of risk. The energy used by Bitcoin mining is a concern, but the industry is moving towards greener solutions. Now, Bitcoin isn't a get-rich-quick scheme. It's a long-term savings tool that requires understanding and careful handling. The financial world is evolving rapidly. To stay ahead, you need to understand what's driving the change. For more in-depth explorations of the ideas and technologies shaping our futures, you can subscribe to this channel. Billionaires and institutions aren't buying Bitcoin because it's trendy. They see it as a solution to inflation. They're investing in a secure, decentralized network with a fixed supply. In short, they're buying digital gold. Now, whether Bitcoin becomes a global reserve asset or simply a way to protect savings from inflation, its provable scarcity is revolutionary. It gives us a choice we never had, a way to save something that can never be created more of. So if you're looking for a trusted platform to buy, sell, store, swap, and manage crypto, give Paybis a try.